Based on the historical data and forecast, Bitcoin has shown volatility, but with a general upward trend. The RSI consistently fluctuates, dipping below 50 and occasionally approaching the oversold level of 20. The Bollinger Bands indicate periods of contraction and expansion, suggesting potential breakout opportunities. Considering the support price of $103,900 and the recent price action, I recommend a long position strategy. The entry price should be $104,700, coinciding with the first day of the forecast period. A stop loss should be placed at $103,900, just below the established support level, to mitigate potential losses. The initial target price is $106,200, aligning with the forecast price for June 8, 2025, and also near the center of the Bollinger Bands. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, a long entry at $103,900 with a stop loss at $103,000 and a target price of $106,500 is warranted. Conversely, if the RSI exceeds 80, suggesting an overbought condition, consider a short position at $106,500 with a stop loss at $107,000 and a target price of $105,000. The most efficient portfolio combines the initial long strategy with RSI signals, adjusting entry, stop loss, and target prices based on RSI levels to capitalize on short-term momentum shifts while maintaining a bullish outlook. Based on the historical data and forecast, Ethereum shows a volatile trend with periods of consolidation and sharp declines. The RSI fluctuates between 46.2 and 69.9, indicating oversold and overbought conditions. The Bollinger Bands show significant expansion and contraction, suggesting periods of high and low volatility. The support price is consistently at $1,840, while the resistance is around $2,600. Given this analysis, I propose a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term price movements. My strategy involves a combination of RSI and Bollinger Band signals. First, when the RSI falls below 20, oversold, we initiate a long position at $2,460, placing a stop loss at $2,420 to mitigate potential losses. The target price for this long position is $2,530. Second, when the RSI exceeds 80, overbought, we initiate a short position at $2,550, with a stop loss at $2,570 and a target price of $2,500. This combined approach aims to capture profits from both upward and downward price swings, while the stop loss orders protect against adverse movements. The portfolio will prioritize the RSI strategy with a 70% allocation, and the Bollinger Band strategy with a 30% allocation to maximize returns. Based on the historical data and forecast, XRP shows a downtrend with consistent support around $2.13. The RSI consistently dips below 50, indicating weakening momentum, and recently reached 36.8, suggesting an oversold condition. The forecast for the next week projects a continued decline, with prices ranging from $2.14 to $2.04. Considering the Bollinger Bands, the price is nearing the lower band, further supporting a potential downward movement. Therefore, a short position is recommended. Entry price will be $2.16, with a stop loss set at $2.2 to protect against a potential reversal. The initial target price will be $2.09, aiming to capitalize on the immediate downward trend. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, it signals an oversold condition, and a short position can be initiated. When the price touches the lower Bollinger Band, it confirms the downtrend. Combining these signals, a short position can be initiated at $2.14, with a stop loss placed at $2.21 above the resistance level. The first target price will be $2.08, and if the price continues to decline, the second target price will be $2.04, aligning with the forecast. This combined strategy leverages multiple indicators to maximize profit potential while minimizing risk. Based on the historical data and forecast, BNB shows a downtrend with decreasing momentum. The RSI consistently below 66 indicates a weakening upward trend, and the forecast predicts further decline. The support price of $639 provides a crucial level to watch. Considering the RSI and Bollinger Bands, a short position is warranted. We will enter a short position at $648. The stop loss will be set at $695 to protect against a potential rebound. The initial target price will be $639, coinciding with the support level. To refine the strategy, we will implement a dynamic target price adjustment based on the RSI. If the price reaches $639 and the RSI falls below 40, we will adjust the target price to $626. This approach combines trend analysis, technical indicators, and risk management for a high-return investment. The overall portfolio will prioritize this short position, allocating 60% of available capital, while maintaining 40% in liquid assets for flexibility and opportunistic entry points if the trend reverses. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has been consistently declining from $175 to $144, with the forecast predicting further drops to $138. The RSI consistently remained below 50, indicating a bearish momentum, and recently entered oversold territory below 30, suggesting a potential temporary bounce but not a trend reversal. The Bollinger Bands show the price trading near the lower band, reinforcing the downtrend. Considering these factors, I propose a short selling strategy. We will initiate a short position at $144. A stop loss will be placed at $147 to protect against a potential short-term bounce. The initial target price will be $138, aligning with the forecast. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 50, we will consider covering the short position or adjusting the target price. If the price touches the lower Bollinger Band, it might indicate a potential bounce, prompting a shift to a neutral stance. The portfolio will prioritize the short selling strategy with adjustments based on RSI and Bollinger Bands. Specifically, if the price reaches $138, we will secure profits. If the RSI exceeds 60, we will partially cover the position, reducing exposure. If the price rebounds to $147, we will close the entire position, limiting losses. This dynamic approach balances risk and reward, capitalizing on the prevailing downtrend while mitigating potential adverse movements. Based on the historical data and forecast, Dogecoin demonstrates a clear downtrend. The price has consistently declined over the past 2 weeks, and the forecast for the next week projects further decreases. The support price remains stubbornly at $0.171, while the resistance fluctuates around $0.182, indicating limited upside potential. The RSI consistently falls below 50, nearing oversold territory, suggesting a potential for a short-term bounce, but the overall trend remains bearish. Considering the Bollinger Bands, the price is nearing the lower band, which further reinforces the downward momentum. Therefore, I recommend a short position strategy. The entry price for this short position should be $0.18. The stop loss should be set slightly above the resistance level at $0.188 to protect against a potential short-term bounce. The target price is $0.161, aligning with the forecast price and providing a reasonable profit margin. We will use a combination of RSI and Bollinger Bands to refine this strategy. If the RSI rises above 30 and the price touches the bottom of the Bollinger Bands, we will enter the short position. This approach aims to capitalize on the prevailing downtrend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, TRON shows a slight upward trend, consistently testing and bouncing off the support level of $0.275. The RSI fluctuates but generally remains within a moderate range, with recent values indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast prices indicate a potential breakout above the resistance level of $0.281. Therefore, I recommend a long position strategy. We will enter a long position at $0.278, placing a stop-loss order at $0.275 to limit potential losses. The initial target price will be $0.284, aligning with the forecast high for the week. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop loss just below the bottom Bollinger Band and a target price near the upper Bollinger Band. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider exiting the current long position or avoiding entering a new one. Combining these signals, my final recommendation is to maintain the long position initiated at $0.278 with a stop loss at $0.275. If the price reaches $0.284, take partial profits. If the RSI falls below 20, enter a long position at the prevailing price with a stop loss at $0.263 and a target price at $0.283. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The price has been consistently declining from $0.747 to a forecast of $0.608 over the past 2 weeks. The RSI consistently remains below 50, frequently entering oversold territory below 30, confirming the bearish momentum. The Bollinger Bands also show that the price is trading near the lower band, further supporting a downward trend. Therefore, a short position strategy is recommended. We will initiate a short position at $0.657. A stop-loss order will be placed at $0.684, just above the lower Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.608, aligning with the lowest forecast price. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 50 and approaches 80, we will consider taking partial profits or adjusting the target price. If the price breaks through the support level of $0.634, we will tighten the stop loss to $0.656 to protect profits. This combined strategy leverages the overall downtrend, Bollinger Bands for confirmation, and RSI for dynamic adjustments, aiming for high returns while managing risk effectively. The final portfolio will be a short position with an entry price of $0.657, a stop loss of $0.684, and an initial target price of $0.608. Based on the historical data and forecast, Sui is exhibiting a downtrend with increasing volatility. The RSI consistently dips below 50, indicating weakening momentum, and recently entered oversold territory below 30, suggesting a potential bounce. The Bollinger Bands are widening, confirming the increased volatility and indicating potential for significant price movements. The forecast data projects a continued downward trajectory, with prices nearing $2.90. Considering these factors, I recommend a contrarian strategy targeting a short-term bounce. My proposed strategy involves a long position with an entry price of $3.02. The stop loss should be set at $2.90 to protect against further downside. The initial target price is $3.34, aligning with the recent resistance level. If the price reaches $3.34, consider moving the stop loss to break even to secure profits and potentially extend the target price to $3.60, near the upper Bollinger Band. This strategy leverages the oversold RSI and the potential for a short-term bounce while mitigating risk with a tight stop loss. This approach balances the downtrend with the possibility of a rebound, aiming for a high-reward, low-risk investment. Based on the historical data and forecast, Chainlink has shown a downtrend, with the price declining from $15.3 to $13.6 over the past 2 weeks, and the forecast predicts further decline to $12.5. The RSI consistently remains below 50, indicating a bearish momentum, and has recently dipped below 40, suggesting a potential oversold condition. Considering the Bollinger Bands, the price is currently near the lower band, which could signal a potential bounce, but the overall trend remains downward. Therefore, I propose a short-selling strategy targeting the downward trend, combined with a strategic approach to capitalize on potential short-term rebounds. My strategy involves a two-pronged approach. First, initiate a short position at $13.4, placing a stop-loss order at $13.8 to protect against a potential bounce. The initial target price is $12.5, aligning with the forecast. Second, if the price rebounds and touches $13.4 again, we will re-enter a short position with a stop loss at $13.7 and a target price of $12.5. This approach balances risk mitigation with the potential for profit, capitalizing on the prevailing downtrend while accounting for short-term volatility. This portfolio prioritizes the short-selling strategy due to the strong bearish signals from both RSI and the overall price action. Based on the historical data and forecast, Eigenlayer shows a fluctuating trend with a recent dip followed by a slight recovery. The support price is consistently at $0.775, and the resistance is at $1.53. The RSI fluctuates between 47.2 and 62.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, I recommend a long position at $1.42, coinciding with the start of the forecast period and a potential bounce from the lower Bollinger Band. The stop loss should be set at $1.34, just below the forecasted low and a buffer from the support level. The target price is $1.49, aligning with the previous resistance level and a reasonable profit target based on the recent price action. If the price breaks through the $1.53 resistance, consider increasing the target price to $1.6. If the RSI falls below 20, indicating an oversold condition, we should consider a short position at $1.3 with a stop loss at $1.39 and a target price of $1.2. This strategy aims to capitalize on short-term price fluctuations while managing risk through strategic stop-loss placement. Based on the historical data and forecast, Render exhibits a clear downtrend. The price has been consistently declining from May 24, 2025, and the forecast for the next week projects further decreases. The RSI consistently remains below 50, indicating a bearish momentum, and frequently dips below 30, suggesting oversold conditions. The Bollinger Bands are also widening, confirming increased volatility and a potential continuation of the downtrend. Given these factors, I recommend a short-selling strategy. Enter a short position at $3.74, placing a stop-loss order at $3.88 to protect against unexpected upward movements. The initial target price is $3.35, aligning with the forecast for the week. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, it signals an oversold condition, which could be a temporary bounce. However, given the overall downtrend, we'll use this as a potential entry point for a short position. Enter short at $3.52 when the RSI falls below 20, set a stop loss at $3.67, and target $3.35. Conversely, if the price touches the lower band of the Bollinger Bands, it might indicate a potential bounce. We'll combine this with RSI. If the RSI is below 30 and the price touches the lower band, enter short at $3.5, set a stop loss at $3.63, and target $3.35. This layered approach maximizes potential gains while mitigating risks associated with the volatile market. Based on the historical data and forecast, Injective shows a decreasing trend. The price has fluctuated significantly but has been trending downwards overall. The forecast for the next week indicates continued downward pressure, with prices hovering around $11.6 to $12.3. Considering the RSI values, which have mostly been below 70 and frequently dipping into the oversold territory, below 50, and the Bollinger Band showing price fluctuations around the center line, a short position strategy is advisable. We will initiate a short position at $12.3, placing a stop-loss order at $13 to limit potential losses if the price unexpectedly reverses. The target price will be set at $11.6, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, we will enter a short position. Conversely, if the price touches the lower band of the Bollinger Bands, it also signals a potential buying opportunity. In this case, since the trend is downward, we will prioritize the RSI signal. Thus, we enter short at $12.3, set a stop loss at $13, and target $11.6. This combined approach leverages both momentum and volatility indicators to optimize our position and manage risk effectively. Based on the historical data and forecast, DeXe shows a volatile trend with periods of both upward and downward momentum. The RSI consistently fluctuating around the 40 mark, indicating a neutral to slightly bullish sentiment, but dipping significantly below 30 during the period of June 1st to June 6th. Considering the forecast prices hovering around $11 and the support price of $8.94, a strategy focused on capitalizing on potential rebounds from the support level is advisable. I recommend a long position entry at $10.7, with a stop loss placed at $9.7 to mitigate potential losses if the price breaks below the support. The initial target price should be $11.2, aiming to capture a quick profit from the anticipated upward movement. To enhance the strategy, we will integrate the Bollinger Bands. The price consistently touching the lower band suggests an oversold condition. Therefore, if the price retraces to $10.7 again, we will re-enter a long position with a stop loss at $9.5 and a target price of $11.4. This combined strategy, leveraging both RSI and Bollinger Bands, aims to maximize returns while minimizing risk. The final portfolio will consist of 60% of the RSI strategy and 40% of the Bollinger Band strategy to balance risk and reward. Based on the historical data and forecast, FLOKI exhibits a downtrend with increasing volatility. The RSI consistently fluctuates, dipping below 40 on several occasions, indicating oversold conditions. The Bollinger Bands show widening bands, suggesting increased price volatility. Given the forecast prices consistently below $0.0000824, a short position strategy is recommended. We will implement a strategy based on RSI and Bollinger Bands. When the RSI falls below 20, oversold, we will enter a short position. The entry price will be $0.0000750. The stop loss will be set at the upper band of the Bollinger Bands, which is $0.0000812. The target price will be $0.0000700, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate Bollinger Bands to manage risk. If the price touches the lower Bollinger Band, $0.0000750, we will enter a short position. The stop loss will be set at $0.0000812, and the target price will be $0.0000700. This combined approach leverages both RSI and Bollinger Bands to enhance the probability of success. The portfolio will consist of 60% of the RSI strategy and 40% of the Bollinger Band strategy, optimizing for both risk and reward. This allocation balances the strengths of each indicator, providing a robust investment approach for FLOKI. Based on the historical data and forecast, Jito has shown significant volatility with a recent downward trend. The support price consistently remains at $1.57, while the resistance fluctuates. The RSI indicates periods of oversold conditions, particularly around June 6, 2025, with a reading of 47.9, suggesting a potential rebound. The Bollinger Bands show the price recently trading near the lower band, indicating a possible oversold condition and potential for a bounce. My recommended strategy is to initiate a long position at $1.74 on June 7, 2025, capitalizing on the oversold RSI and the potential for a price correction. A stop loss should be placed at $1.69 to mitigate potential losses if the downward trend continues. The target price for this trade is set at $1.82, aligning with the recent resistance levels and offering a reasonable profit margin. We will utilize a combined RSI and Bollinger Bands approach, entering when the RSI is approaching the oversold level and the price is near the lower Bollinger Band. This combination aims to capture short-term upward movements while managing risk with a conservative stop loss. The portfolio will allocate 60% of capital to this long position, 20% to a short position if the price breaks below $1.57, and 20% in cash for flexibility. This diversified approach balances potential gains with risk mitigation, reflecting a prudent investment strategy. Based on the historical data and forecast, POL, XMATIC, exhibits a downtrend, consistently approaching the support level of $0.199. The RSI values, fluctuating between 34.8 and 49.8, indicate periods of oversold and overbought conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering the forecast prices, which project a continued decline to $0.199, I recommend a short selling strategy. Entry price should be $0.215, with a stop-loss set at $0.226 to limit potential losses if the price unexpectedly reverses. The initial target price is $0.205, aiming to capitalize on the anticipated downward trend. To refine the strategy, I'll incorporate the RSI and Bollinger Bands. When the RSI falls below 20, indicating an oversold condition, we'll consider a long position. Conversely, when the RSI exceeds 80, signaling an overbought state, we'll initiate a short position. The Bollinger Bands can provide additional confirmation. If the price touches the lower band, it suggests a potential buying opportunity, and if it touches the upper band, it hints at a potential selling opportunity. Combining these signals, I propose a portfolio with 60% short positions and 40% long positions, adjusting based on real-time market conditions. The secondary target price is $0.199. Based on the historical data and forecast, SUI is exhibiting a downtrend with increasing volatility. The RSI consistently dips below 50, indicating weakening momentum, and recently entered oversold territory below 30, suggesting a potential bounce. The Bollinger Bands are widening, confirming the increased volatility and indicating potential for significant price movements. The forecast data projects a continued downward trajectory, with prices nearing $2.90. Considering these factors, I recommend a contrarian strategy targeting a short-term bounce. My proposed strategy involves a long position with an entry price of $3.02. The stop-loss should be set at $2.90 to protect against further downside. The initial target price is $3.34, aligning with the recent resistance level. If the price reaches $3.34, consider moving the stop-loss to break even to secure profits and potentially extend the target price to $3.60, near the upper Bollinger Band. This strategy leverages the oversold RSI and the potential for a short-term bounce while mitigating risk with a tight stop-loss. This approach balances the downtrend with the possibility of a rebound, aiming for a high-reward, low-risk investment. Based on the historical data and forecast, Virtual's protocol has shown volatility with periods of both upward and downward trends. The support price remains consistently at $1.76, while the resistance fluctuates. The RSI indicates periods of oversold and overbought conditions, with recent values trending downwards. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Considering these factors, I recommend a short-term bearish strategy. Entry price should be $1.95, with a stop-loss at $2.05, and a target price of $1.7. To implement this strategy, we will utilize a combination of RSI and Bollinger Band signals. When the RSI falls below 45, indicating an oversold condition, and the price touches the upper Bollinger Band, it suggests a potential shorting opportunity. The entry price will be $1.95, capitalizing on the potential pullback. A stop-loss will be placed at $2.05 to protect against unexpected upward movements. The target price is set at $1.7, aligning with the established support level and providing a reasonable profit margin. This strategy aims to capitalize on short-term price corrections within a volatile market. Based on the historical data and forecast, Conflux demonstrates a downtrend with increased volatility. The recent RSI values consistently hover below 50, with several days falling into oversold territory, below 35, suggesting a bearish momentum. The forecast prices for the next week also indicate a continued downward trajectory, fluctuating between $0.0764 and $0.0768. Considering these factors, I recommend a short selling strategy. The entry price will be $0.0768, coinciding with the initial forecast price. A stop loss should be set at $0.0817, slightly above the recent high and to protect against unexpected upward movements. The target price is set at $0.0709, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, indicating potential for a bounce. However, the overall trend remains bearish. Therefore, a conservative approach is best. We will maintain the short position with an entry price of $0.0768, a stop loss at $0.0817, and a target price of $0.0709. This portfolio combines the signals from the RSI and Bollinger Bands, capitalizing on the predicted downtrend while incorporating risk management measures. This approach aims to achieve high returns while mitigating potential losses.